Hello, Jim Adams here from Easy Investing Income YouTube channel. Today I want to share with you some important points about selling options during a down market. These are things that have helped me to be successful not just in up markets but also down markets. Actually, with down markets, I've found that I've been able to do a little bit better than I expected. So let's go ahead to jump into it. There's quite a bit to share with you guys. Um, Now, the first thing I want to start with, and I in my last video, I shared several value companies. One thing that's really important is with a down market, you really need to dig a little deeper into the companies you want to invest in. Be careful with growth companies currently. They're kind of out of favor and they've been hit the hardest during this down market. I prefer value companies and I've been able to find really good premium in the value companies. So that's the first point. The second is during these more trying times, it's probably a good idea to take a lower delta. I typically do a 20 delta, which is like an 80% probability of the option expiring out of the money. So you might want to take a little bit less risk, maybe do a 15 delta or a 10 delta, like an 85, 90% chance of the options expiring out of the money. I'm sticking to 20, but I've been finding myself staying a little bit lower than going above 20. In the past, I would do 25, in some cases even 30, but I'm sticking to 20 and maybe going slightly below that. Another important thing is you need to be sure to disperse your expiration dates. And what I mean by that is be sure you don't have everything expiring on the same days. That can be a big issue if the market crashes and everything is expiring that same week that the market crashes. A lot of times the market will crash, but within a couple of weeks it will bounce back and your investments, your stocks, your ETFs will bounce and come above that, and the money will be actually out of the money at that time. Another important point is planning and how you actually plan your options. I do a weekly planning sheet, and I've gone over that in other videos where I look to be sure that I'm not caught by surprise with either expiration or ex-dividend dates. I don't think I've ever been caught by surprise with expiration dates, but ex-dividend dates I have. I've had people um, execute an option for assignment because of a dividend date. So you got to really keep track of those. And I encourage you to look at the spreadsheet in the prior video. I think it might have been 2 videos ago. I'll provide a link up here. But take a look at that expiration worksheet that I use. I keep track of the ex-dividend dates. I keep that track of the expiration dates. I probably need to add another column to also keep track of the earnings because they can also have a fairly big impact. To give you, for instance, Intel came out with really fairly good earnings, but their outlook, I guess, scared the market, and they're down big today. I think they're down 6 or 7%. So next is what's important is closing your options. I have what I call an 85% profitability rule. So if within a contract, if I can be 85% profitable, I'll give you for instance, if you sold an option and you've made $100, if it's only worth $15 and you can close it for 15, then it's very well worth closing it for that $15. And I've been doing that fairly consistently, and I've been able to make more profit with that. So it's really been a big deal to increase the premiums that I'm able to make. I'm able to sell options at times when the premium is at its highest. Um, Another important thing to look at is buying what I call outer arms. So say you have a cash secured put, you can actually, while you're looking at it, like a lot of times I'll look at the cash secured put and then I'll look in an outer arm and see if I can get it inexpensive. And if I can, then I'll turn it into a vertical credit spread just by buying that outer arm. And you don't actually have to do that when you sell the cash secured put. You can actually buy an outer arm at any time. I'm going to go over a spreadsheet next where I share the specific positions that are in the money and how I'm going to deal with them, just to give you kind of some examples that you can use going forward. But so you don't have to buy that outer arm right when you're selling the cash secured put. You can do it later. even months later. You might even do something that's sell a position that's 6 months out. In 3 months, you might decide to buy that outer arm so you can free up some more margin or cash. So, with that being said, let's jump into the worksheet review, and I'll share with you what I'm doing with some of my positions currently that will be expiring over the coming weeks. So, stay tuned. Let's go ahead and jump into that next part of the video. Okay, I've opened up Excel and I've opened up my planning worksheet for this week. And actually this week I didn't have anything expiring, so I've added any of my positions that are currently in the money or that I think might be an interesting thing to talk about in this video. So let's actually just jump in. I do want to mention, like I said, I'm having a really good month. This is one of my better months. If you look here, I've already done for this month in my brokerage over 3,000, which I think I've only had one other month where I've done over 3,000. In my Roth IRA, I've done over 500, which I only have, I think I've got 50,000 in there. So that's about 1% for 1 month. So, so not bad. Last month with that Roth IRA, I did take a loss with ARKK, and I'm going to talk about another position I have with ARKK, but I took an $800 loss. For the whole month, it was a $200 loss because I did have 600 in over 600 in premium on other positions, but with the $800 loss, it was kind of a bad month. So far this month, it's going quite well at 532. So I just wanted to add that. I like to keep track of where I am during the month. That way, if I've hit my target, which is 3,000, I don't need to worry about selling, more options. I can kind of look at more managing and keeping track of what's going on, kind of like what I'm doing in this video. So let's go ahead and jump in. So the first position that's in the money, and I like to color code these a little bit. It makes it a little bit easier to kind of go over them. So the status, and this is Ligon and Platt, and it's taken a dive recently. So it's currently under $40, and I believe it's paying like a 4.2 or 4.3% dividend, which is really good. And I think it's mainly because of supply side issues. I did not see anything overwhelming with their earnings. It looks like their earnings. Um, I can't remember if they missed earnings, but I don't think they have. And I've got a vertical put credit spread at 45 and 30, so it's $5 over $5 in the money. Now it's not expiring till March 18th, but let's say it was expiring tomorrow. Well, I would look at either closing it or rolling it. If I close it, it's probably going to be a fairly big loss, $700-800. But if I can roll it, since it is in the money, but it's not crazy in the money, I would probably look at rolling it out to the next month, which again, if it's expiring tomorrow, it would be March or potentially April, to see if I could do two things. One is not lower or not increase the strike price. So if I hopefully lower the strike price, because in most cases I am able to lower it, but also gain premium. So if I can lower the strike price and gain premium, then I typically will roll. And in most cases, especially with these value companies, I've always been able to do that. Where I have not been able to do that is with ARC Innovative, mainly because it drops so radically. I think in 6 months it went from 160 to I think it's under 70 now. So that's the first one, Ligon and Platt. And here you can see I put the ex-dividend date. And I didn't add ex-dividend dates for any of these others because right now it's not overly pertinent. I'm not going to be impacted by any ex-dividend dates. And typically you're impacted if the ex-dividend date is within a week or two of your expiration. So if this was, well, in a way, I do need to worry about it, but in March. So if this again was expiring tomorrow, then I probably needed to roll it or close the option probably earlier in the week, like Monday or Tuesday. The next one is this Fidelity, and in my previous video, I mentioned I thought it was Fidelity, the investment company, and it's not. It's an insurance company, but it still has really good financials and pays a really good dividend. It's currently out of the money, But the reason I wanted to share this is one I could potentially, this is a cash secured put, but I could potentially um, change it into a vertical put credit spread. So, and I looked and it looked like the strike at $35 was $35, which is interesting. So for $70, and I believe I have two contracts, I could add in another 7,000 in margin or cash for additional trading. So I could make that decision. And as it gets closer, and you can see the expiration 617, as it gets closer, this value will come down. So in March, I could probably do the same trade for 15 or $20. So again, you don't necessarily have to convert a cash secured put, right away. You can do it down the road to manipulate your account. And I've done that quite a bit. And I've actually, when I've closed some positions, it didn't make sense to close the outer arm, so I just closed the shorted position. And I've been able to, like with this, if I do the outer arm and I leave it there, I can continue to close the inner arm or the short and continue to write more contracts. And I don't need, at that point, I don't need to buy more outer arms. So just wanted to share that. A lot of people, may not realize that. I'm not sure I realized that in the beginning. The next one is, this is Smith and Wesson. Strike is at 20. It's currently at 16, so it's fairly deep in the money too. Again, it's expiring in 318, so I would again have to either roll it or close it or let it be assigned. I like Smith and Wesson. Its numbers look good, and I wouldn't mind owning it. This is one of the stocks that was a suggestion from my son, so I may end up letting it get assigned, and giving it to him is kind of a gift down the road, something he can inherit because he's really into Smith and Wesson. So you know, so that's what I'll be doing with Smith and Wesson. Now the next one is eBay. I like eBay. I have sold things on eBay and I buy a lot on eBay. I probably use it as much, if not more, than Amazon. And I kind of like the company a little better than Amazon currently. Now it's also in the money. It was way out of the money when I did this contract. It's what, 58, so it's just slightly out of the money. My guess is it'll probably come back into the money. If it doesn't, I'm probably going to roll it. So I'll probably look at rolling this. It's a 60/50, so it's a vertical put credit spread. So if I roll it, again, I'm going to be looking to either keep those strike prices the same or to lower them. So if I can potentially lower them and make more premium, I will look at doing that. And the amount of premium, I'm shooting for between 150 to 200 per trade. So I believe I have two contracts on that. So my hope is to pretty close to that 200, 150 to 200. If for some reason I need to close it, I could also close it. And I'm actually not resistant to owning it at $60 a share. I believe recently it was over $80 a share, or 85. Of course, um, just like most growth companies. And I look at eBay almost like value or value growth. Um, it's, I think, much below 60 or 55. It's really worth, what that value, and then I'd really have to consider assignment. So next, let's look at PG. Now this one's a little different. This is Procter and Gamble, and this is actually a covered call that I did a while ago, and it's at 150. With the flight to quality, Procter and Gamble had some really good earnings, and they're well over one. Let's see, 158. I think they're over 160 now. So I'm pretty deep in the money for this covered call, and I would do the same thing. Now I am not doing um, call credit spreads, so my hope is to roll it. I might let it be assigned, but my hope is to roll it. And with a covered call, I find them a little bit easier to roll than I do the puts. So I'm hoping, and again, I don't need to do it till April, but it could very well come back down because this is all-time high, and it's significantly all-time high. I think its original, or its prior all-time high was like 155, and now it's well over one, or it's over 160. So I'll look at probably rolling that. Worst case scenario, I may let it be assigned because I have some good premium with it that I may want to put someplace else. So next, ARC. This one's a very different kind of play. It's very deep in the money, and this was the one, I believe earlier in the month I rolled it, and I rolled it way out to 119.2024. At the time it was, I think it was 106 or maybe 108, was the strike. So I drastically lowered the strike and I rolled it out quite a distance. It does mean I'm tying up 17,000 worth of premium, but I do think there's going to be a point where ARC is going to become valuable again, and I'm thinking it's going to be probably 6 months to a year. So I think at some point, you can see now it's, I believe today it's actually below 70. I do think it's going to come back, and just like I mentioned with, I think it was Fidelity FNF, I can actually buy the outer arm down the road, and I, I believe I saw the 45 that wasn't too pricey, 6 months out. So as I get farther out, if I need that additional margin or cash, I can buy that outer arm, and I can be able to, you know, add quite a bit of margin or cash back into my account, or the ability to use more of the cash. So that's ARC, and that's a little different. I have done this before, and at the time, if it's still really low, you know, say it's still in the 60s and 70s, I may do it again and roll it down to 70 or something. I was able to drop it almost $20. So, you know, maybe I could drop it again another 15 or $20. And I did earn good premium. I think I made an additional 200 and some odd dollars, rolling it, you know, so I was able to meet that. Originally, it was a vertical put credit spread, and I rolled it to a cash secured put. So that's a little different. That's another way to kind of, you know, deal with some of the ones that are way deep in the money. And again, my only situation with the puts has been ARC. ARC Innovative has really been hit hard recently. Now the next one is Intel, and I mentioned earlier in the video, their outlook was not so rosy, so they've dropped 5 or 6% today. So now I have some put vertical credit spreads that are in the money, and I have a contract that's 50, and the short is 50, and the outer arm is 42.50, and it's just slightly out of the money. So my guess is what I've seen with these value companies, they typically within the month will jump back up or will increase back above what, you know, what this strike, which I believe 48 is a 52-week low. So I could potentially, if it doesn't rebound and it stays at 46, 47, I can again roll it out into the future and hopefully get more premium. Or I may let it get assigned. I feel like $50 is a good value for Intel. At $50, I think it's paying really close to 3%. If I'm able to roll it and get it a little lower, I might even be able to get like 3.1 or 3.2 dividend. And I really like Intel. You know, they're not way overpriced. Again, I believe at this 48, I think their 5-year low is 47. So it's already been hit pretty hard. So my guess is it's going to come back within the next couple of weeks. So it's a good time to actually sell some puts on it, and especially with the thought that it's probably going to be in the low 50s again fairly quickly. So you can see that's pretty much how I manage things. I usually look 3 weeks out and make those kind of decisions, but there's a lot you can actually do. And I probably have 40 or 50 positions total, and these are the only ones that are in the money, and the only one deep in the money is ARC. So I encourage you to do something like this. You know, set up a spreadsheet. I also mention things that I'm looking at that I'm also interested in potentially selling options on, or stocks that I want to own. So as always, I hope you enjoyed this. If you have any comments, if you want, you know, if you want to comment on what I've done with ARC and you think it's a little crazy, or, you know, is this new to you, the fact that you can actually buy an outer position or an outer arm to create a vertical credit spread from a cash secured put? Please add a comment below if that's something new to you. I'd just be curious to see if you've done that or if you're aware of that. And as always, please hit that like button. Please subscribe. If you want more hand holding, I do have the two memberships in Patreon. I've got the trader and the investor. So take a look. It's growing. I've got more people joining. We're having weekly meetings. So as always, I hope you had a wonderful day, and thank you for joining me in this video. Thank you. Bye bye.